The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. Okay, we'll get the show started today. I've posted the chart of the Halliburton. This has been our first question someone asked, and that is a oil services stock. I think former Vice President Dick Cheney is a big investor in that, as I recall. And basically, you can see the long-term pattern on this, that it was making some type of a bottom here. And you can see the beautiful three-drive to a top pattern that was made. Again, it was perfectly symmetrical, is what we'd like to see when we watch these. And then I put the cycle in, and that brings us to someone asked me about some of these cycles that I talked about, because I've been looking at cycles since the early 70s, 1970s, when I first started looking at it real closely, when I was a member of the Foundation for the Study of Cycles when it was in Pittsburgh. Now, the problem with these cycles, you'll see that nominal cycle. A nominal cycle just means that it happens over and over again. The trouble is that it shifts back and forth. That's what the problem is. It just moves from one to another. A perfect example of this, we'll show you two of them here. The first one we'll look at here is the Australian dollar. And what you'll see here is you'll see that really nice nominal cycle that's there, which is basically 48 days. And then you notice how it shortens up. And that's the problem. The same thing happens on the upside. As you can see with that 135 pattern that was there, it works for like one or two cycles and then it shifts. And the reason for that is these cycles are very, very dynamic. They're certainly not static. Jim Hurst in his book, The Profit Magic of Stacked Transaction Timing, thought that these cycles were static, and I don't believe that that's true. I believe that they're more inclined to look at the astrological things that we're watching. Now, speaking of the astrological things, we have a beautiful full moon today, and also the planet Jupiter is right there. I mean, if you could see it in the night sky, it's pretty hard because you have to use binoculars or a telescope, because the moon is so bright that Jupiter is right behind it, and it's a couple hundred million miles away, but it's really, really bright, and that's one of the bigger, the planets of expansion. So my assumption is we're getting ready to make a little top here in the market. That's basically, what I'm looking at here for possibly today. There's a couple of charts that I think are very important. One is the Dow Jones chart. This is the one that is very, very important, as always, because it's the one that's reported quite a bit. And as you can see here, we're making an ABCD pattern pretty much spot on. And I believe we're going to take that high out. Now, we took out last week's high, or the high from February. We only took that out by just a very, very small amount. The Dow Jones actual contract, this is the futures, but the actual Dow Jones index itself that doesn't trade, it's just reported as an index. The stock index that's reported it on is the futures, and that one only made a higher high by less than 1 point. And when you're talking about something that's trading at 16,399, that's really quite amazing. So I believe that the possibility here to the downside, and we've got some strong resistance in here. If you remember last week when we were talking about when we were looking at the E-mini S&P, we were watching for the market to make repetitive moves, because that's what we're doing all the time. And as you can see here, back on the 16th, we backed off roughly 25 points. We did it again on the 18th, and we did it again on the 19th. And the one we had, on Friday has now taken us up into new high ground. Now, if you'll look up there, you'll see a little red box that I've marked at the 1.27. Folks, that's the one that is the really important one to look at. Now, we've been up to 1939 last night when we had the strength in China and we had the strength in Hong Kong and the strength in Japan. But that 127 is going to be very, very important. Now, you can see the large ABCD structure. That takes us up to that 1960 level, and we could certainly get there also, but you've got to really look at that 1.27 level in my opinion, because it's just a number that pops up all the time. And because we have the full moon here, in order to get the market up another 30 handles from where we are now, we'd have to have a move of over 400 points to the upside in the Dow. And I don't think we're going to see that on a full moon day, but I guess it's certainly possible. So watch that level of 1942. Now, like I mentioned, we've been to 1939. We didn't back off much, after that level. So that's what we're watching here so far in the S&P. That's the one that I think is very, very important. We'll keep an eye on that as we go through some of these others. Now, I've had a question to talk about crude oil for just a second, and I'll be happy to put this chart in here. Crude oil's been acting really beautiful. We've got to give John Logan a little bit of let's give him the sound of one hand clapping, because he had a really nice talk about this stuff a few days ago, that they were seeing, his profile was seeing, support coming in, and it certainly has. As you can see here from this crude oil chart, which is a 30-minute chart going back over the last 10 days, we made the first 61% retracement spot on the 16th of February, and then we tested the 78% retracement of that low on Friday, which was also a 50% of the previous low. And now what we're doing is we're up here testing, the 786. And should we get above that, the ABCD structure on this will measure to the 38 level without any trouble at all. That's what it looks like. But oil's got a little bit of a bounce here. I mean, I don't know if it has anything to do with this deal that they're talking about over in Saudi Arabia, but frankly, I don't think any of these things mean very much because they certainly they don't have a lot of things to hang their hats on. Okay, now we want to switch our content over here now to the gold market, because this is one that we all are interested in, and gold responds very well to full moons. And since we have one today, I wanted to show you what's happened over the last 10 days. As you can see, there's a very strong support line there, which has some cycle implications also, but we've hit this line 1, 2, 3 times now over the past 10 days and held it today at 1206, and we've had a $14 rally this morning off of that low, which is important. Now, what we need to know is the last 2 times that we had rallies here since the 18th, each of those rallies was the first one was $17, and now we've had one $15. So we want to watch this real closely, because above 1222, this puppy could take off. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting tfnn.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've been asked to talk about this Brexit thing, which means Britain exiting the euro. I like it when they give these things names like too big to fail and quantitative easing, whatever they are. But anyway, this is the British pound over the past 6 or 8 months. As you can see here, this thing has been in a downtrend for a considerable time. We had a really good bottom formed pretty much back at the 148 level where we rallied 400 pips. We had lower tops all the way. Then we came down and made a 1.27 expansion down here on the 20th of January. And if you notice, we rallied up to the 50% retracement of the previous high. And now in one day, we gapped down 120 pips last night and has since dropped another 100 pips. There's a great deal of selling coming into the pound, and they're talking about Britain leaving the Eurozone. But whether that's going to be the case or not, I don't know. What we're going to do now is we're going to rely on some of the work of one of our good friends here at TFNN. My trading buddy is Jim Bartolioni, and I wanted to bring up a couple of charts that he has that look really interesting here on the British pound. And the first one I'm going to bring up is to show you what this looks like going back to 1985, and that's when we had the Plaza Accord, I believe. And we will take a look at this here. And we'll take a look at this and we'll be able to see what we're looking at. As you can see, the similarities here are very similar between those two patterns that we have here. And note that the pound likes the ratio of 0.86, which is the square root of the square of 1.618. In other words, you keep squaring it and you'll get down to 0.86. Now, I don't particularly look at that number, but the pattern here looks very, very interesting, because we're coming into some really strong support here in the British pound on a long-term basis. And if we take just a little bit quicker look here, a quick look on something that's very long term, and all I'm doing is, just because when these markets collapse like this, you can say, okay, where are they going to go? And so we are down in an area now, we're trading at 140 and change, and we haven't been below this level of 139 since back in 1995. So this is going to be some really strong support coming in to that level. Now, the second part of this is the euro, and we want to take a quick look at that. I know some of you folks don't trade these currencies, but they're the easiest things to trade. And what I wanted to mention to you, you can see on this euro chart that we've certainly we've been in a downtrend. We've had lower bottoms and lower tops. We've been in this real tight channel, and we were down 7 days, and today we were much lower. That also tells us that it also opened not sharply lower, but it did open lower Sunday night in New York, early morning London, and now we've broken quite a bit in the euro also. All of these are telling us that they are pushing these currencies down, and that is making the dollar rally. Whether that'll make stocks go up or not, still remains to be seen. The euro itself was in such a beautiful downtrend pattern that you'll just have to, if you like Fibonacci numbers, I mean, hello, take a look at this chart from February 16th. It's a 15-minute chart. You can see all the ABCD patterns that I've put in there. They're pretty easy to see. You can see the cycle lows that are in there. We had another one this morning that gave it a 40 pip bounce before it went down and made new lows. We're now trading down near the 1.618 expansion of this, down around the 110.40 level. So this thing has been in a downtrend. I mean, you sell the rallies in a downtrend. You have lower tops, lower bottoms. So that's the easier trade to do, when you're watching these. So, just keep an eye on it. That's it. Now, with the rise in the in the crude oil like we've had here recently, we need to take a look at the Canadian dollar here, because you'll notice that this Canadian dollar on the long-term daily chart has some major support coming in here within about 100 pips of where we are right now, and so we want to watch that very closely. You'll notice that the ABCD structure caught the top up there at that 147 level, and then we had the biggest correction we had, since the one we had back between March and May. We had a 10-handle correction there, and we're having a 10-handle correction here at the same time. So we want to look at that. When I say handle, folks, I mean it's the number that we're looking at. Like the S&P has a handle of a 1937. So if it goes from 1937 to 1936, that's a handle. All the other little things are just ticks in between. So that's what we're watching when we're looking at these currencies. All of the currencies are at major inflection points, I would call them, because we've got so many things that are very, very powerful to look at what we're watching here. Now, let me take a look at quickly the Japanese yen, because that's one of the really big ones, because of the yen is, they now have negative interest rates over in Japan also. But as you can see here on the long-term weekly chart, we had the head and shoulders pattern up there earlier in the year. We had the lower tops. Now we've had the two successive equal retracements down at that 112 level. That takes it down to a 50% retracement of the low in 2013. However, there's still a chance that if this thing really gets unwound, you could get all the way back to that either 103 level, which is where the old breakout occurred. Now remember, Tom O'Brien was bullish this stuff, folks, back when it was, at 75, I believe, right near the bottom in 2012, and it's had one hell of a run. We had a big, 3-drive pattern down there at that time, another ABCD structure measuring there, and that's when Tom came out with his handle, the King Dollar, which is, certainly was the thing to be in, and the dollar has been king, all during that time. So this is what we're going to be watching here as we look at these currencies. Those are the major currencies, that I wanted to bring it up to your to show you what I'm looking at, on a technical basis, because that's one other one, and that is the Australian dollar. We showed that a little bit with the cycle thing, but I wanted to mention to show you that we're very close here on the Australian dollar of also breaking out above the this 135 pattern. After it hit the 5 point, it dropped 300 pips, stopped exactly at a 61% retracement twice, and now it looks like we're going to try to get to this 72 level, which is a 78% retracement of 0.5. if that is going to be a spot where it's going to have resistance. But if we get above 72 in the Australian dollar, that would probably tell us that these commodities, could be getting ready to turn a little bit, and then you'll have a pretty good answer of where we think we're going. We'll have a question here about silver. Silver's been lagging gold badly the whole way. As we looked at the long-term chart on gold, we hit the 0.618 of the 2014 high to the tick, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. And I had a question about these folks that give these recommendations on CNBC. Well, no different than what we do here. What we're doing here, though, is we're looking at the technical picture. We're certainly not looking at some of the things that the fundamentalists look at. And remember, when these folks are on CNBC that work for these firms, most of them, like 99%, don't have any skin in the game. You know, it's not their own money. So you've got to remember that. Now, I kept this chart of Alibaba. Sarah and I were looking at Alibaba way back in 2006. We were watching it trade for when it was on the Hong Kong exchange for around $40. It had very active trading. It followed the Fibonacci sequence of numbers really nicely. But the reason why I brought this chart up is to show you that when the initial price offering came down, you really didn't get a good buy pattern until we had a 3 drive to a bottom pattern, and then you see this tremendous move up where it doubles in price. And I saved this chart for a specific reason. On the high day, they had the two big executives at T. Rowe Price on CNBC, and they said that they were basically, I didn't get the chart up yet. What did I do wrong? Just a second. Let me get it up. I will. It will be up here just a second here. I thought I posted it. Yeah, evidently I didn't. And who knows? Here it comes, folks. Bear with me now. It'll be posted twice then, but we'll have it anyway. But anyway, I saved it because the people were on there were telling us how bullish they were at $115 a share. I didn't buy it at 80, when it was making its bottom. When it's 50% higher, up at it got all the way to 120. They said they were in this for the long haul. There was no way they were going to get out of this position no matter what happened. Well, it went from 120, down to 60, and it's still trading in the 60s. So, you got to be careful, because if they don't have any skin in the game, and you got to do your own work. Like Jim Twentyman says, defy human nature, do the work yourself. This is why technical analysis, or what I use in technical analysis, which is pattern recognition, helps you determine, who's buying. You don't know who they are, but you know that someone's buying, because if prices are going up, there's more buying. If prices are going down, there's more selling. That's the bottom line of what we're watching here, and that's what you're trying to do when you look at this. We know that the patterns have a high probability of working. We know that they repeat over and over again. We see that all the time. So that's all we're trying to do. And even with that, you still have the potential of being wrong, because you never know whether you're right until it's all over. So the only thing you can control is your risk, and that's what you want to control. So remember, that is really important. And the most important part of technical analysis, of course, is the mental part. You've got to be able to handle the mental part, and part of that is, knowing how much you have to risk on a trade. That's pretty much what you're really trying to do here. So just keep those factors in mind, because it's it's quite important. Now, I wanted to talk a little bit about the structure of the market, because we've have this big ABCD forming coming into this full moon today. That usually means that there's going to be a retracement, and we've been up for quite a few days now, so that's an important part. But if we go back to look at the Treasury bonds on a longer term basis, you'll see here that this beautiful 3 drive pattern that we have here had perfect time symmetry. It was just spot on. There was 186 weeks from point 1 to point 2, and there's 186 weeks from point 2 to point 3. And at that point, we had the butterfly pattern. That's when it hit that 171. We're 5 handles below. We're at 166 and change today. and the market has not given up very much. Even when the market was strong last night, Treasury bonds would not give up very much of a price. I mean, they stayed in that 166 level most of the evening, even when the stocks rallied up into new high ground, up around that 1939 level. We're trading at around 1934 right now in the S&P. So that's just 5 points off the high. So whether that means much or not, we'll just have to wait and see. The question someone's asked was about the gold market. I posted that line that's in there that came in at the 786 at 1202. Folks, if we break below 1202, we just had a $14 rally off of that level. And if we break below 1202, that sets up an ABCD structure spot on at 1165. I mean, you just have to do the numbers. We went up from 1862, we dropped down to 1191, we rallied up to a 1137. Excuse me, let's try that again, 1237, and that will measure down to the 1165 level is what I'm looking for. And I would be a buyer of gold at 1165 because that's an area where we had the old breakout. If you remember, from 1130 in that area to 1150, 1165 is the top end of that range. But that would be a really good spot to take a look at the long side of gold, with the possibility that maybe this breakout that we had is going to be good. But the problem is, folks, we stopped exactly at the 61% retracement. I mean, 1262, and that's the exact 61 from the high in 2014. So that's something that I think is very, very important. Now, I wanted to mention just a little bit about there's a big conference in New York. It's the Money Conference, and I want to go back down memory lane here because I used to go to those all the time. Fact is that the two fellows that started that thing, Tim Borquin and Jim Sugarman, Jim Sugarman actually lives in Hong Kong now. It really, they started the whole thing, and I was one of the first speakers because they were my students. I taught them how to trade, and the conference was on February after, September 11th, and they had an option at the Marriott to cancel everything. The Marriott gave them that option because things were so bad. I mean, they figured nobody would be traveling. And Tim and Jim decided that, yeah, we're going to go ahead with it. And they did. And believe it or not, they had a turnout like never before. I mean, they had so many people. You couldn't even walk down the halls. There were so many people that showed up. It was really a tribute to these guys who really wanted to contribute. They didn't want to back out of their contract, which they could have lost a lot of money, but it turned out that they did do okay. But the reason for my telling you this story is that one of my students is a fire chief in New York, and he asked me if I wanted to go down to 9/11 to see what it was like. And of course, me being rather adventurous, I said sure. And so we got into his fire chief car, and has all the bells and whistles and everything. We get down into that area. You couldn't even get within 2 blocks of 911 unless you had a security vehicle, and he was a fire chief, one of the chiefs. And so I'll tell you the remainder of the story. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I was telling the story about going down to 9/11 area back in February of 2002. My friend was a fire chief. He picked me up at 7 in the morning there at the Marriott Marquis, and it was like just, a very, very short drive. And when we got down there, it was very, very busy, a lot of things going. And he said, don't put the window down. And I said, why? And he said, well, just don't do it. And of course, me being the idiot that I am, I put the window down, and oh my God, the smell of jet fuel was so bad. This was 6 months after. Anyway, I couldn't take it. I told him, I said, that's enough. I said, let's get out of here. I was so shaken, I had goosebumps, and it was really eerie, folks. Just can't tell you what that was like. But anyway, I feel very, very badly for the families and everything. So anyway, that's history. Let's get on to the mystery, and that's what's going to happen to the markets next. The next chart that I want to talk that I think is that I'd like to talk about is the Dow Jones Transportation Index, because we're here again, we're setting at another really critical level, folks. We're looking at a Dow Jones Transportation chart going back just about 9 months. You can see the big ABCD structure that we had down here. And what did we do? We had the same rally that we had in the BC swing almost exactly. And there's also an ABCD structure between the January 20th and where we topped here, potentially here on the 16th. The 17th. So this is important. The market's really got to get really, really strong in here in order to break this sequence of of the market moving down because it's still in a downtrend. Equal rallies are, another sign that you want to be, looking to the short side of the transportation. So all of this is telling us you got to be really careful in here. This full moon is always very important, so we'll see see what's going on with the same thing. That we've got too many comedians in this room. We're going to get rid of some of these guys. What they do is they make posts in here about comments that I make, and it's a little difficult sometimes to keep your train of thought going. But we did have that big ABCD structure in the Dow Jones that I showed you. We did not have that same ABCD structure in the NASDAQ. The NASDAQ was far weaker. We'll be able to look at that here. You'll see that the NASDAQ was only able to make a 78% retracement of this. Now, we're going to be testing that or going above it a little bit this morning here. But if you'll notice that between the cycle highs that we had back in November, December, all I've done now is move those over to show you that that's where we're looking at 13-day highs, and that's what we're coming into right now. And of course, 14 is your lunar cycle, so it's very close in here. So you want to be real careful. It's never very smart buying a market that's up 200 points in the Dow on the opening. That never works very well. At least it never works very well for me. So want to watch it a little bit closer to see what's going on. We'll check the markets and what's going on here. We got up, made a new high here in the S&P by just a half a point. And we'll see if we can get up to that 1942 level, which I think is going to be some pretty stiff resistance. We've got gold still, down quite a bit, but it's held at 1202 level. As long as we can stay above that, gold could get another $8 or $9 higher, but I don't think we'll get much more than that from that level. Now the currencies are just, they're really melting down. You're down 250 pips in the British pound. And it's actually come back a little bit, and the euro's down 100 pips, and it's also breaking down, which is not to be unexpected because it's certainly been in a big downtrend for quite some time. One of the key markets to watch that everybody talks about, especially on CNBC and Bloomberg, is the crude oil market. Everybody's extremely bearish in that, and yet it still continues to pop up here. If we can get crude oil up about another $0.50 from where it is right now, it could easily run another $3 a barrel without any trouble at all, because that would give us a ABCD structure up around the 38 level. So watch the crude. If we get above that 33.80, that would be quite a bit above the 78% retracement over the last few days, which comes in at 33.63. That would be a pretty good indication that we would be looking at the market getting ready to head to higher levels. And even though it's very bearish fundamentally, but who knows what the fundamentals are, the charts are telling us we're in the midst of a little bit of a rally here. That's another advantage of looking at fundamental analysis versus technical analysis. The fundamental analysis is running pretty late most of the time by the time you get the supply demand figures, whereas the action in the technicals are pretty easy because you just look at the bar chart. Prices are going up, there's more buying. Prices are going down, there's more selling. That's pretty much what we're watching when we look at these. Heating oil has also been pretty strong too. It's been stronger than anything. The gasoline has been the weaker, but I wanted to mention, because gasoline made a beautiful Gartley pattern here on Friday, and it really on Thursday, and it's had a little bit of a rally. We rallied 4 or 5 cents a gallon from that level. So this could be another reason of why we could be looking at a potential pretty good bounce. We've got gas here at $1.39 here in Tucson, and if you go to Costco, you can get it actually 8 cents cheaper than that. So this is cheapest oil has been in the last 8 years, I believe, and we will find out if that's going to be the case. Now, we are much lower than we were back in 2009. We got to $30 a barrel, and we've got all the way down to 26 and change this time. So it's been a lot of a movement, to the downside. Just for general information, those of you that are looking at copper today, be really aware you're making an ABCD structure on the upside in copper. So don't get too involved with the upside, because the odds favor chance favors the prepared mind. So be careful here in copper, because it's going to have a lot of resistance at this ABC level that we're looking at in the copper. So we want to watch that a little bit. I've had a request to show that long-term chart on the gold market, and I'll be happy to do that. This is the one that goes back several years. As you can see, we're in a downtrend. We had the 3 drive to a bottom pattern there around Christmas time. Down at that 1040 level, we made a slightly lower low, as you remember, and then we had the big rally, and it stopped exactly at the 61% retracement at 1262.60. It was equal to the 8-week high that we had back in April of 2014. Both of them took 8 weeks to do it in the same price. You got to respect that, and especially coming in when it's exactly 61% retracement. Now, on the pullback on the downside, watch 1165, because that's going to be an ABCD pattern based on the hourly chart over the last 6 days of trading. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a chart here that was sent to us by one of our listeners. It's from the National Research Restaurant Association from Bucky Dent, Harry Dent, not Bucky Dent. Bucky Dent was a baseball player. www. Dent Research. And Harry Dent has put this chart up and shows the similarity of what's happening to restaurants as far as their sales dropping. And we've had a pretty big drop here, as you can see, equal to what we had in 2007 and 2008. So we'll just have to wait and see. This is just for general information purposes of what could be happening, with the economy, because this is how one of those things that they determine with GDP or whatever the things are that they look at. But will remains to be seen whether that's going to be the case or not. Now, the $64 question is, I mentioned the 1942 level in the S&P, and we got to 1940 and a half, and that was and we backed off about 5 points from that. I don't know if that's good, the high or not, folks. I can just give you these numbers, and that's all I look at. And if they hit it, fine. If they don't, you can't even see what's happening. So we'll wait and see whether this is going to be the case or not. Now, I had one other thing that I wanted to mention, and that is the fact of this being the full moon, and it's a very big full moon because of the fact that it's accompanied by several major astrological events. And this could be the situation, because if we continue strong today and we get above that 1950 level in the S&P, either today or later this week, that tells us that we're probably going to go up into the March 8th level, because March 7th and 8th is a really big level to be looking at. Now, I've asked to take a look at the VIX index, because the VIX index was telling us that we're probably ready for some type of a rally today. Now, we're getting that so far, but the VIX index has been no help with us for this last few weeks anyway. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.